Hello, everyone, and welcome to Office Leadership Series. Thank you for joining us. I'm thrilled to see so many participants and excited for the discussion ahead. Today, we are going to discuss the impact of COVID on the investment landscape of India's shared real estate economy and the roadmap for its recovery. We're going to ask some very pertinent questions to a panel of experts and make the most of this opportunity by learning from their perspectives, knowledge, and vast experience. Today's webinar will be moderated by Mr. Amit Ramani, founder and CEO of Awfis. Over the past 5 years, under Amit's guidance, our company has evolved to become one of the most recognized brands in the flexible workspace industry. I'm excited to see him lead today's session to build a constructive dialogue with our esteemed panelists. So without much ado, let me begin by introducing our panelists for the session. It is my absolute honor to introduce Mr. Anuj Puri. Mr. Puri is a highly respected industry veteran and an industry thought leader with 30 years plus of experience in Indian and global real estate. He is the chairman of Enerock, one of the leading real estate services company. Prior to Enerock, he was the chairman and country head of JLL India. Welcome to the panel, sir. We're thrilled to have you here.
Thank
Next,
you.
we have Mr. Rajesh Jaggi, another highly recognized leader with immense experience in the real estate industry. He leads all real estate aspects of Everstone Capital in India. Prior to Everstone, he was the managing director for Peninsula Land. A very warm welcome to the panel, Rajesh. We're excited to hear from you. Now, coming to our next panelist, Dr. Nikhil Sikri, co-founder and CEO of Zolo. He's someone who has worn multiple hats in his career so far. He is an MBBS from the very reputed AIMS and an MBA from Indian School of Business. He's currently leading a very successful business venture into co-living spaces in India. What a fascinating career trajectory. I'm sure you are motivating a lot of entrepreneurs in our country, Nikhil. Welcome on board. Looking forward to your valuable insights on the topic. Last but not the least, we have Mr. Abhay Pandey, who is the general partner at A91 Partners. A91 is a leading early and growth stage investment firm. In his career spanning over 20 years, Abhay has helped many entrepreneurs build their companies. His massive experience as a consultant at McKinsey, an investment banker at Merrill Lynch, and a seasoned investor at Secure Capital makes him an exceptional leader. Welcome to the panel, Abhay. We are looking forward to hearing your views on our topic. Over to you, Amit.
Thanks, Sumit, for the introductions. Good afternoon, ladies and gentlemen. We are back with our second edition of Office Leadership Series, a topic which many of us have read, analyzed, and debated over the last 5 months. While we are seeing a lot of uncertainty as part of the pandemic that has brought our way, we just can't wait to get back to some level of normalcy. The magnitude of the crisis clearly has been immense, right? In some ways, comparable to the 1930s Great Depression and also to the financial crisis of 2008 and 9. Reports suggest that we could have a V-shaped recovery in quarter 3 and 4. Still to be seen, but clearly the GDP is severely impacted for FY21. So we today have a panel of rock stars who are industry veterans and have understood this space extremely well. They're here to share their views on the shared real estate business, and also will we have a U, V, L, or some other shape or letter recovery as we go forward. So let's begin our discussion. And my first question is to Anuj. Anuj, you've been the industry veteran. In my books, you are the Roger Federer of the real estate industry. You've taken Enerock to superlative heights. You did the same at JLL. You've seen the ups and downs of the economy. When it comes to shared economy, clearly collaboration is at the core of it, and social distancing is the paradox, right? So they're counterintuitive, and shared economy has certainly seen a lot of negative impact in the current crisis. What do you think will pave the way for the recovery here, especially for India's real estate and then specifically for the shared real estate economy, Anuj?
Thank you very much, Amit, for having all of us. You do a fantastic job at Office. We love the format that you've set up and the business that you run. So delighted to be on the panel. I think 4 or 5 things, Amit, I would say is, it could easily have been an answer that the government needs to provide more fiscal stimulus and the industry starts to boom. And if industry booms, then various aspects, including the shared economy and including the shared real estate starts to boom. I think in some of the more mature markets that that has worked, will work. They have the ability, they have the headroom to be able to put in that kind of money, and like the US $3 trillion. I think for us in India, I mean, I would say is very simply, we'll have to start to learn to live with it. I think we'll just have to come out of this bubble. I think the governments will have to start to allow the business normalcy to really start to function. I just feel that is what is really required. Once that happens, which is a big one, then it is going to be is on the shared economy, shared real estate, because from a cost perspective, Amit, it's going to be better. From an efficiency, it's going to be better. From a productivity, it is going to be better. And these are the mantras that everybody is going to say once the lockdown really opens. This is going to be the big thing. I also feel is where shared economy, shared real estate is going to move forward is on two aspects. One, flexibility. I mean, many of us have understood is that when you get hit with such a pandemic that nobody had ever thought at the beginning of this calendar year, even, you want flexibility. And in a shared economy, shared real estate, you have that flexibility. And the second is ability to ensure that there is safety, security, health, everything is taken care of. Which at times can become difficult because ability to spend or understand that aspect is really not there. So I mean, in a summary, I would say is the big one to me is not as much as the physical stimulus that the government really needs to do. I think it is just within ourselves only. And fortunately, all of us on the screen today, the panelists that you brought in, Amit, are all entrepreneurs. So I think we are the guys who will have to pick it up and then just go down and say, guys, we'll have to start this economy going. Government will continue to do what they have to do, but I think we'll have to do it on our own.
Thanks, Anuj. Abhay, my next question is directed to you. Obviously, you've led multiple new age consumer tech companies, previously at Sequoia, now at A91. India's shared economy was kind of on a blossoming mode, right? We were all looking at profitability. There were IPOs being planned. So how do you think, how long do you think it'll take the shared economy to recover, and what measures will speed up the process?
Thanks, Amit, for the question, and thank you for having me here. I go back to the days when I was representing Sequoia on the board of Awfis, and we used to have discussions on how do we get to profitability, and we were so excited to see margins keep improving every month. And the focus was, and the first month of EBITDA positive numbers was a huge landmark. It was away from common wisdom that even shared economy companies can start making money early in their life. Clearly, COVID has upset many of those calculations and trajectory. But coming specifically to your question on how long will it take, I don't think that there's one answer that fits the question, because shared economy and even shared real estate is just not one shared real estate. It's got many components. Like in the other business part of the world where online has come back to normal and more than normal, almost everyone is doing better than what they were doing pre-COVID, and certain sectors are doing better than pre-COVID, while many other sectors in the offline world are languishing. I do think the pace of recovery in the real estate world, shared real estate world, will be different based on the segments. If you take your own segment of co-working, it's pretty clear that your tenants are some large companies and some small companies. I can see the smaller companies wanting to come back because Dalala wants his employees to come back and start working, while the larger companies, the MNC types or the big companies are more careful. They'll say, hey, wait, let's be super careful. We have a global directive, we have ABC. The norms for different companies on what risks they're willing to take on working will be different. So the rate of recovery across different segments will be different, and therefore your overall recovery will be a function of what your mix of tenants is and could vary center by center. Coming to other parts, I can see student housing taking a lot longer to recover, and co-living where working professionals are working together. Nikhil should answer that, but I would imagine it's not been hurt very deeply. There should be a reasonable amount of stability in that. Some people may have gone home because they're not working in their office. It's better to go home to their small town, wherever else, and they will start coming back. But if you sum it all up, my best guess is that we would see a reasonably sharp recovery till the 80-90% level in quick time. and the last 10 to 20% will take a while. And that a while could very well go into June, September next year. But I would expect by end of this year, early next year, we would be up to 80-90% of recovery. That's looking at the sector now from the outside and giving your best guess.
Sure. Thanks, Abhay. Rajesh, so you lead a large warehousing business in those.
Moving ghee shakkar, Amit.
we are all hoping for that, right? So Rajesh, obviously you lead a large warehousing business, Indo space, 36 million square feet, probably larger than most commercial real estate for many Asian countries put together. So clearly, on one side, warehousing has not been impacted that severely. On the other side, you also oversee the Everstone's real estate portfolio in India, where commercial real estate seems to be a bit uncertain. So what do you think is the path to revival for the shared economy, and specifically what's going to happen to the warehousing sector in particular?
Yeah, thanks, Amit, for having me on the show. Just, a couple of points here. So one, I think what's happened is, I want to just break up this whole question into phases here. So, I think pre-COVID, if you saw, especially the warehousing economy, okay, it was on a boom time, okay, and suddenly, we got COVID and everything came to a standstill. I think everyone had a rough phase during the first 2 months. What has happened is that luckily the government announced that warehousing are essential services. So we actually kept all our parks open, and so did everyone else, which enabled, last mile delivery, etc., to everyone across the country. That actually helped in keeping the business going on. And what you would find actually in July is that from a warehousing and an industrial perspective, approximately 90% of the tenants have gone online and 100% in operation. So whether that's from a warehousing perspective or from an industrial perspective. So I think that's a very good signal and a sign. That means, like Anuj was saying, that we need to move on. Okay, I mean, how much can we kind of, just stop and halt? I think in the rural areas, the country is moving on because we find week by week, the number of people coming to work is increasing. The good thing is that the infection levels are low. Everyone is maintaining, huge amount of precautions, and that's a good sign. What I have found in the month of July, suddenly I'm finding a lot of inquiries coming in. But what's happened is that people are deferring their decisions for the next quarter. Mm-hmm. So in my opinion, I'm just talking ground, what's happening at the ground, Amit. Mm-hmm. I think what's going to happen is that unfortunately, 2021, that's up to March 21, I think it's going to be a little bit of a slow growth phase. And the reason for that is because we hit the monsoons and we are not able to deliver any product to the client or the tenant. So our large clients like Amazon, Flipkart, etc., were wanting space. We are not able to deliver because we're only going to start production of the warehouses post the monsoons, and then the first delivery of my new buildings will only come up in March. So my view is that we will see slow growth, across to up to March 21. I'm hoping the quarters after that, whereas it's industrial and warehousing, we would actually see a growth curve going upward. The other thing I just wanted to add, everyone talks of warehousing, but let me tell you, a large part of warehousing, in a general sense, also forms, light industrial manufacturing. It's a large portion of my portfolio and even other people who are in the business. And just to let you know, that's the backbone of the economy, right? That's where we will get jobs from. That's how the economy will, in my view, the engines start working together. The good thing is that all state governments are actually aggressively reaching out to manufacturing hubs across Asia to actually have people come in and set up industries across their state. So I'll just give you an example. Tamil Nadu is extremely aggressive. So they formed a special body that is contacting electronic manufacturing companies out of China and actually offering them space, okay, as alternate to China, not replacing China, as risk mitigation to set up plants in Tamil Nadu. And you won't believe it, Amit, we've actually contracted 3 transactions over the last 1 month just for electronic setting up manufacturing. I think that's a very good sign, because that's where I think the engine of the economy will start moving ahead. Yeah.
So everybody seems very, very optimistic, which is a good sign for everybody who's on the program today. Nikhil, congratulations first on your recent fundraise, 56 million. Wow, in these times, that's outstanding, right? But as you and I both kind of live in that co-living, co-working kind of space, we do have seen some challenges there as well, right? Occupancies have been a bit low. People have returned to the hometowns. Some of it is behaving similarly to what's the challenges we are facing in the flexible workspaces. So what do you think will be the key opportunities and the challenges to recovery for the shared real estate sector?
Sure. So, Amit, I'll split the answer in 2 parts. One is the space or the sector, and second is companies like us, because they both will go through a different curve in recovery. In sort of the positive and the negative of both are very different. So, as such, shared living is going to sort of take a hit. Shared living is non-discretionary, so living cannot take a hit. Like you cannot decide not to live at some place, so you got to choose a place. Shared will take a hit as a construct, and unorganized sector is gonna take a disproportionate hit, because they will not have the ability to provide what was earlier something which was taken for granted, which is now very critical: safety and security. So that bit is going to destroy unorganized sector a lot. In fact, in our sector, I mean, co-living is the new age living accommodations, and erstwhile PGs and hostels, 30 to 40% have already shut down. They're gone. I mean, now we'll have to see who comes back and replaces them, or if it's ever replaced. So disproportionate. So there is going to be a strong hit. And disproportionately more towards unorganized guys. For players like us who are organized, well-structured, professional, tech-led, we are actually, in some sense, we have this as a blessing in disguise. And sometimes dots connect in a very weird fashion. Like the world has been asking me for God knows how much time ke aap doctor ho gaye, yahan kya kar rahe ho? And COVID sort of brought back those dots. We started our disinfection protocols 5 days before WHO declared it pandemic. So I could sort of read where it's going and how it is. So, and we knew that this is inevitability, and it's just a matter of now it's called endemic to epidemic to it's pandemic or whatever. This is for a lingo. But this is inevitability to bring in that safety, security, what kind of protocols, hygienes we need to build. We were able to do it in a couple of days, implement across the properties. And over the last 3-4 months, that has given us a very strong perception of the safest player. And that is helping us. And that's why we didn't lose a lot of occupancy. That's why we are gaining back occupancy. From 1st of August, we are doing actually 110, 120, 150 bookings a day. Which was 0 in June. So just to sort of give a perspective on recovery, it was 0 in June. July, first 8 days went really well, and then government suddenly thought that we need 1 more week of lockdown, God knows why. How many hospitals were we able to think we were planning to build in that 1 week? I mean, God knows why. But that 1 week really created havoc, because people didn't expect it to be 1 week. They thought it's the same drama that happened last time. They will say 1 week, then 1 more week, then 1 more week, then 1 more month. And people sort of starting running away from all these cities. And we can see that sense. We can see people coming back now. And like, as I said, in August, the numbers have moved from 0 to 150 a day. So for overall shared real estate, whether it's co-living, co-working, small players are going to take the disproportionate hit. Because the base of functioning, just the base itself has got complicated. The bar has been raised on the base. Earlier, if you want to operate a co-living, you are just a small-time building owner. Desk lagao, ban jao co-living provider. That's all you need as a co-working provider. You put some beds and you are a co-living provider. And that's about it. But now to put all that, to ensure when somebody is moving in, all the checklist. So we have we sort of do a early prevention protocols if somebody feels the symptoms. To do all these things, it's very, very tough. The base itself has gotten complicated. So in that sense, market is going to take a hit, but some companies, especially market leaders, are going to actually benefit from it. And when does it recover, whether it's UVL? I think it's a bimodal view. So in fact, I had floated a survey on LinkedIn asking people which month do you think it'll recover? September, October, November, December, and January and later. The top two winners, 40% are September and January. Like October, November, December are no takers. So either the world is overtly optimistic, either you are in the optimistic camp like we are, बस ये हो गया जी बस it's just few more days and we are done, or it is like अब तो बहुत time लेगा, January, February, March, we'll see. So God knows who will turn out to be right, but my sense is that if I look at data from a very biological indicators of this virus, the seropositivity is a great indicator of declining death rates. So wherever seropositivity has sort of touched 20% or plus, the death rates have drastically declined. New York has come to 12 deaths a day. Delhi has come to 12, 15 deaths a day. Mumbai is still slightly higher. The number is slightly higher, but the fall is quite significant. And whatever we have the latest surveys, India is overall, I think, at 13, 14%. So as we start touching 20 to 25, again, I mean, it's possible that this trend does not continue in future. Virus mutates, something happens, we lose our antibodies. God knows, I'm also not trying to be the God and say, I know what's going to happen. But an observation which has sort of happened in the past, and if it continues towards future, like no new variable is introduced in this whole environment, then I think in 2 months' time, we should see death rates drastically declining across most of the places. And as that happens, people should basically start going back, because overall the itching to go back to normal is very high. So when we are asking our customers, so we speak to almost every day 500 people, right? Because we're doing market research and we are sort of doing customer discussions, onboarding discussions. People who are at home, when will they come back? People are itching because I think people are tired staying at home. So in the end, it's the narrative which got to change, and the narrative requires a strong data point for the narrative to start changing. And the data point, in my view, is going to be declining death rates, which is happening across a lot of cities and should happen everywhere else in a matter of few months, my sense, and I could be wrong.
See, there's always an advantage of having a doctor on the panel, right? So he's spoken and he's optimistic. So that gives us all a lot of comfort. So that brings us to the end of our first section. But before we move forward, I would request the panelists to tell us what kind of recovery is it? Is it U, V, or L? If you can put up your placards, would greatly appreciate it.
I'll have to say,
I bought another one, Amit.
Anuj has printed his own.
I'll go with Abhay. Unfortunately, my placard, I couldn't get it in the morning.
Sure. Great. Thank you, guys. Thank you.
My only worry is repeated lockdowns. And that's why. Otherwise, I was very much with what Rajesh and Abhay said, is that if it doesn't happen, then I'm pretty much with what they said. It's just that I'm fearful. Exactly what Nikhil said, that the 1 week in Bangalore did disrupt.
Perfect. So moving along, guys. Clearly, I think the road ahead is around building sustainable models, right? How will the real estate models adapt? How the shift will happen? How we'll accommodate, the shifting customer behavior? Harvard Business has talked about, adoption of new technologies. McKinsey says, you got to reskill yourself to come back. Clearly, 2008, was a downturn, and we probably have some lessons to be learned from then, because clearly, I think co-working, the genesis happened post that, right? Clearly, the flexibility of the models came from that aspect of it. So clearly, we've seen there's a massive consumer behavioral shift, right? And people will need to adapt to these sustainable business models. So Anuj, today, 90% of the CEOs are saying across industries that sustainability is critical for companies to be successful in the future. So what needs to change in the current co-working, co-living business models to make them more sustainable and future ready for such pandemics?
Yeah. So Amit, I'll enlarge that a little bit because sustainability is several times misunderstood with just being green. I think really what you mean is business sustainability, financial sustainability, as you rightly said, is that long-term sustainability. I think to begin with, the first thing is, I think Nikhil articulated it beautifully. It is going to be consolidation, in my view. And even in your industry, even in Nikhil's industry, even in my industry, even in Rajesh's industry that you're going to see. And Abhay is the one who's going to consolidate everyone. So I do feel is that that's the first thing that you're going to start to see is that the unorganized, perhaps not so efficient, participants get consolidated. Second, I think is you're going to see a role of technology playing more and more importance in ensuring that there is going to be long-term sustainability. Third, I would say is it'll be flexible, collaborative. I did touch earlier a little bit on that. Fourth, I feel is there will be new asset-light models that will start to emerge on the play for various stakeholders, not only for the shared economy, but otherwise also you'll start to see asset-light models. But I would say the fifth, in my mind, Amit, is the most important. And certainly in these times, I've seen it is more important than ever before. It is going to be about empathy. Mm-hmm. How many businesses are able to show empathy? Mm-hmm. Either to their vendors, to their clients, to their staff, to their various stakeholders. In my view, that is going to be where you will see long-term sustainability of the businesses. Many businesses will not be able to understand empathy, and maybe their backs are against the wall, and at this point in time they're just not being able to understand. I think those who will be able to understand and deal with the society and the stakeholders at large with an empathetic solution, in my view, are the ones who are going to be long-term sustainable in this market.
Anuj, clearly your tagline says that. It says we are with you, right? So clearly Anurag, is moving in that direction. Abhay, I think, what are your thoughts on the next phase of the business sustainability? What will be kind of the key indicators, metrics for the shared real estate industry to consider while drawing up these plans in this post-COVID world?
So Anuj touched upon some of this, but let me expand on what's going on in the world. If you look at how people are looking at and valuing businesses and thinking about them, there's a huge divergence between businesses which are providing products in a way versus companies that are providing services. Apple is an exception on products, but it's largely the companies that are providing services, and Apple has a large service component, which is often misunderstood. So it is all about how do you make lives easier, smoother, more efficient, etc. And the companies who are able to do that for individuals or corporates are going to be the more sustainable long-term winners. And capital and valuations and value eventually is going to flow in that direction. I think the first wave of co-working that started off, unfortunately, started off with just saying, "Hey, I'm providing an alternate place to sit, which is cheaper, or it's more attractive." Mm-hmm. I think that's an initial proposition that works in the early phases of an industry. But what the industry needs to do, and which all of you are thinking about, is how do I evolve from here to become a solution provider to my clients versus a space provider? Mm-hmm. Because space is a commodity. You can keep reducing the price and keep screwing up your own ROCE because of providing it cheaper. But unless you are able to graduate to saying, I'm providing a better solution than the shop next door and making the lives of my consumers, individuals or corporates simpler and better, I will not be the winner. So that's the goal. Now, how do you do this? It's you are closest to the consumer, you know what their pain points are. While the obvious stated pain point is cost, there's a lot many things that they are not aware of. There are many things that they're not able to access because of affordability issues. And as an aggregator of many smaller enterprises, and in some cases mid-sized enterprises, and it's definitely for individuals. You have to bring many of these services. Sometimes it's about bringing some of these services at a lower cost because you can procure them at a cheaper price. In some cases, just tailor making it to your clients or tailoring it to your clients. And sometimes understanding what the requirements of how the world works is going to evolve. Now, with people sitting at homes, it's getting more and more convenient. Now, the previous solution was saying, hey, move your office 500 or 400 people in BKC at one office to my co-working space in office because it's cheaper, it's fancier, it's more efficient, etc. But now 100 people living in Goregaon might say, hey, you know what, I don't want to go very far from Goregaon, so I need a solution in Goregaon. I want 100 people in Andheri and I want only 200 people in Bandra. And therefore just understanding where the client requirements are, and therefore what's your physical infrastructure looking like, what's your architecture looking like. It's not one solution fit all in all cities even. And at the next level saying, now, is my client using the most sophisticated technology tools? If he's not, how do I educate them? How do I procure it for them? How do I make it available and teach them about this? How to provide other services to them? So there's a lot that all shared real estate services companies will need to provide to make sure that the customers go up in terms of their efficiency, their ability to do their job better. And that has to be the selling proposition, which the next door shop cannot do. As Nikhil said, the current guy who's there, who's shutting shop, was just that alternate guy who was saying, it's my house, I put 2 beds, come and live here. That's not the solution. The solution is a lot more sophisticated than that. And the consumer does not often know that because he's not aware of what else is possible. And you have to do the thinking for them, and you have to provide the solution to them. And as one person gets it, he will speak about it and the word goes around. I remember having discussions and saying, how do I make many things attractive? Or feasible. For example, how do I monitor attendance? How do I see how much time is being spent at work versus off work? How do I provide AWS services, for example, at a better price? Do I provide teleconferencing facilities at lower cost, better quality? Many other things. I mean, this goes on and on. But that's where all the models will have to upgrade themselves and start thinking of themselves as a solution providers, not a space provider.
Great. Thanks, Abhay. Nikhil, so what are the key changes in customer behavior that you've noticed in the past 3-4 months? You alluded to it, some of that earlier. And how kind of is Zolo adapting to those customer behavioral changes?
Yep. So the biggest change in behavior is the sensitivity toward your living environment. Rewind the clock. Let's like 6 months back, very rarely people cared. I mean, there is a segment which cares. I'm talking about early entrants and not the segment which goes after a while. In that segment, affordability was one of the biggest levers. That if I get a cheaper place, I'll move there, even if it's badly managed, even if it's filthy, even if it's whichever way it is. I just mentally I rationalize it as that I got to go and sleep, man. I stay in my office till 7, 8, 6. I just got to go and I then hang out with my friends and I just got to go and sleep, and that's about it. So that one piece has changed substantially. The sensitivity to the living environment has become critical. Second big change that we are observing in the customer behavior is everyone is toying with an idea of integrated living, which is not co-living, no co-working. It is sort of an integrated living. And even customers are toying with that idea. And they are only giving us these kind of ideas. They are asking, sir, a co-working space bana do na upar. Why don't you do this? Why don't you do this? So we are also toying with that idea. The One Zolo Red Carpet, which is coming at the end of the month, has a co-working space on the terrace for people to work. So we're also sort of listening to them and trying to innovate. But everybody's trying to sort of fiddle with that idea of integrated living, working, having fun, sort of an integrated place, which is taking care of a lot of your needs, desires, aspirations, and basic necessity of going to office. So that's a second big change. And third big change is value of privacy. And thankfully, Zolo's vision always has been that we are not a shared living company. You will not find that word in our website anywhere. We are a personalized managed living company. So we manage your life and we personalize the offerings that you want. So our infrastructure was always geared to change 2 to 1, 1 to 2, 1 to 2, 2 to 3, and the backend supply chain is sort of geared to that. So people are asking for single rooms. They are saying, look, I don't want to share, and we are more than happy to oblige them because we have that flexibility to do that. So these are the three big changes: sensitivity towards living places. Second, toying with the idea of something integrated. No one knows the answer yet. So I'm not saying someone has figured it out. Neither have I figured out, nor our customers know. We're just listening, and that's how I think innovations are created, by listening to customers constantly. And third, being people asking for private spaces, more personal spaces, and that is what we are observing.
Sure. Great. Thanks, Nikhil. Rajesh, so what do you think are some of the measures that the shared real estate industry should take to ensure that they are cushioned against economic headwinds in the future?
Yeah, so I just give you a general perspective, on whether it's shared real estate or it's other real estate, and I think that one thing that comes to my mind, and top of mind is India and all businesses have always grown on debt. Okay, and my view is that I think people in COVID have realized, and this is what I learned at my business school, that cash is king. Okay, and I think so my belief is that I think uh, everyone is realizing that money in the bank and less debt in these times is the most valuable thing that you can ever have. Okay, and so my view would be to everyone that everyone should relook at their debt percentages, and I think work really hard towards bringing that down. I think the future expansion, you can name a few companies that you see the growth that they've had in COVID, right? I mean, the kind of monies that people have raised, and they've all aimed and targeted to be debt free and be cash positive. And I think that, to me, is the most critical aspect of any real estate that we should be living, we should be doing. I think, to me, on for shared real estate, I think what's critical for me is how can co-living, co-working actually give comfort to the consumer. Okay, because there is going to be a lot of interaction when he comes into these spaces. So I think that safety and precaution is something which I think should be relooked at, because that's something that we should be able to give that to the customer. And I think if that happens, I think there's no stopping of that asset class, because Anuj and Abhay said, everyone's now. I think small offices, unfortunately, I don't want to say it, but people who are unemployed, okay, who are looking to start new businesses after COVID, okay, people who want to save costs because they've had a rough time in COVID, okay, they will be looking to go to co-working spaces. Okay, where else would they go? Okay, at the end of the day, another example is, how can any of us, okay, if you're not able to go back to our offices, we need people to start moving out to kind of ensure that facilities are available. And like you guys are providing something at work at home, but printers, scanners, where do you go? You need to go to these places. So I think there's a huge amount of growth opportunity that is there. But I think the first thing to me is, how can we ensure that the customer feels safe? And I think that's where the problem lies, where these frequent lockdowns, government not giving us confidence to move ahead. But I think a lot has happened in the last 2-3 months. I think these are key takeaways from me. I think this third thing, obviously, is, which all of us are working on, is digitization, right? I think that's another thing which how can we make our life easier? Okay, and I think that's something that's going to be embedded in us and imbibed by all of us. Because just to give you an example, the other day I was just taking a poll within my company, and everyone told me that we are more efficient working at home, and we can churn out transactions, and we can kind of do deals much faster at home. So I'm saying, so that means there is efficiencies that we've learned, right? And I think those are the good efficiencies that we'll keep. But that doesn't mean we're not going to go back to office. I think India is a different market. Okay, India is not like the US. Okay, where you can sit in the countryside and not come to work. You don't have that luxury. Okay. Yes, Nikhil did speak about integrated townships where home, office, shops, all that can be taken care of. But again, you need infrastructure for that, right? I mean, if you need to have them, you need accessibility, you need transportation. So my view is that it's a matter of time where people will start moving out, especially I think for the co-working and co-living, people will get back to those areas. But I think it's just a matter of time.
Thanks, Rajesh. So moving on to our last section, clearly in various capacities, the panel has either raised tons of money or has invested tons of money, right? So clearly there are key factors that are shaping the investor sentiment in 2020. Investment outlook for the shared economy for 2021 is kind of what we want to get views on. So at the beginning of the year, clearly co-working, co-living, warehousing, all these asset classes were getting a lot of attention from the investors. And obviously, just in the co-living and co-working space, close to about $300 million got raised over the last year and a half. So my first question is to Abhay. Abhay, you raised a fund as a young VC firm of 350 million. How do you see the investment landscape shaping up now? Will the shared real estate sector, shared economy models see positive sentiment from the investors post-COVID? Abhay, you're on mute.
Thanks. Good that you asked post-COVID. So here's what's happening in the investment landscape. You look around the world where the Fed has expanded its balance sheet by $4 trillion, and there's surplus liquidity everywhere. The cost of capital has gone down considerably, and therefore the return expectations of investors have adjusted to lower levels. If they haven't adjusted, they should adjust, because otherwise you'll not find the investment opportunities that you're looking for. So there is a lot of capital available all around the world, and India is easily standing out as one of the most attractive destinations. The 2010 to 2020 period was China. Most people believe, rightly or wrongly, and we'll know in the future, but most people believe that the next 10 years belong to India. Appreciating and realizing that India has its own challenges, but whatever happens, we will see a lot of capital come in. Whether it's happy at the end of it or not is another story, but a lot of capital will come in the next few years, and it's coming in already. We are seeing that. The good news first for your sector, the shared real estate sector, is that it's one of the largest available markets. And investors love super large markets. So therefore, the first box is ticked extremely well, because there's where you can't invest a lot of capital which is coming into very, very attractive small businesses. You are looking for large markets where money can go in. So people will want to come and evaluate these businesses. The caveat here, though, is that in spite of a lot of capital being available, growth at any cost term has been thrown out of the investor diary for now. Now, things change, and as we go ahead, while investor return expectations are coming down, they'll not go down to a sub 10% level. I'm talking dollar returns. And therefore, people will keep thinking of every business model as it is going to give me so much return or not. And it's very evident that your business and the entire shared real estate economy can give returns well upwards of that. And therefore, money will want to come in. However, the onus will still be on the founders and the companies to make sure that you are not just promising, but beginning to deliver, at least on the past, a sensible return on the investment. The great thing, I thank you for saying post-COVID, because what investors hate is uncertainty. And at this moment, and I think Nikhil has done a great job to raise money in these times, but in general, investors think of this sector as an uncertain sector. While I can very profoundly and on a Zoom webinar proclaim that the market will come back by this time and so on and so forth, in your hearts you're uncertain. And therefore, to put capital behind uncertainty is not easy. And therefore, as the post-COVID world emerges, and the best bet is somewhere around June next year, uncertainty comes around, I do think that investment interest in the sector will come back very, very strongly because of all the things that I mentioned, which is a large market with sustainable returns over time. The other advantage which will happen is the larger players, the more established players, the players with some established track record of having built a business and having demonstrated operating performance, not just financial performance, but sustained operations over time, versus if, again, a bunch of new players coming in saying, hey, you know what, now capital is available, let me start again. Yeah, you have a huge advantage over them. So I think folks on this panel, which is you and Nikhil, Anush to a much lesser extent, who are in the business looking to raise capital, should be looking forward to the next 6 to 12 months because a lot of money will come in.
That's great, Abhay.
As Anuj said, Abhay, aapke muh mein ghee shakkar.
I think, Nikhil, you and I need to go see Abhay knocking on his door soon. So
Yeah.
moving along, Rajesh, obviously you have a knack for raising funds in any environment, right? Indospace has raised $3 billion, right? And obviously most recent one about a year ago with GLP of almost $1.5 billion. So what are the reforms that can be done by different stakeholders to revive investor interest in 2021?
So Amit, just before I answer that, I just want to tell you, as far as FDI that's come into warehousing over the last couple of years, it's been close to about $7 billion. So that's a huge amount of FDI flowing into just one asset class, which I still believe is still in its nascent stage, and there's a huge upside in it. Coming to your question, I think Abhay, the word that he used was uncertainty and consistency. I think the biggest thing that FDI players look at, okay, is both these things here. So I think that's something that India has lacked, okay, but it's just been our entrepreneur instinct that has actually attracted FDI. But if you look at from a government perspective, the policies are not consistent. For example, during the pandemic, they came out with a restrictive FDI from neighboring countries across India. All investments have stopped because we don't have clarity. Okay, that what is the percentage of our neighbor? How much can he hold? So we don't know what it is. Okay, we don't know whether our fund is having money from China or from Bangladesh. I mean, in the sense, can we invest? Can we not? So everything's come to a pause. So I think for me, certainty is something that we request the government to give. There's enough money chasing India, and there's enough demand, if you ask me. But this is the key thing for me. I think the second thing also, I think, is that across sectors, and I'm just talking real estate generally, I think the government has to speed up reforms here. So when you look at land reforms, permissions, a lot has been done, but I think a lot still needs to be done to attract much larger FDI. If you talk to any FDI player, I think the first thing when they hear real estate, they're like, okay, we don't know how to buy land and we don't know how to get permissions, right? Can you get that for us? We don't know how to run a real estate in India. I mean, that's not a great. I mean, that's great, and we can control the markets, but that's not great when you hear from an FDI player where there isn't a level playing field, right? I mean, at the end of the day, that's what you want. I mean, everyone needs to grow. So it means that, okay, fine, I'm willing to put money. I don't understand business, but I understand you. There's no land reforms, there's no permissions available. What do I do? So I think these are the couple of things generally in real estate that the government should be focusing on. And I'm sure that by the second quarter of 21, though everyone is tentative right now, because I think they're also looking at their own countries and seeing whether there are optionalities to invest there. But I think by the second quarter of 21, you'll have flows coming into our sector, yeah, for sure.
Thanks, Rajesh. Anuj, so in your experience, given the evolving situation, what are the factors that investors?
Sorry, we lost you, Amit.
Sorry, can you hear me?
Yes, we can hear you.
Okay, sorry. So I was saying, in your experience, given the evolving situation, what are some of the factors that the investors will consider before making these decisions, and how can the industry kind of gear up for it?
Yeah, I think both Abhay and Rajesh have summarized it pretty well, and I echo what both of them have said is Amit is there is enough money wanting to get into India. I think there's enough liquidity in the global markets. You are starting to see the expectations on the returns becoming a little bit more reasonable. I mean, we saw last week itself, Amit, Raheja Mindspace REIT coming out. I mean, 15x getting oversubscribed, even in the HNI category. I mean, not only the foreign institutional, even in the HNI category. So, I think there is enough money in a way. You're absolutely spot on that there is a capital. But I think, this capital is a little bit more intelligent this time. And I would divide it into two parts, Amit, that they will really look at it is. One is, I think Abhay alluded to that, is that it has to be a solution provider model. It has to be making something easy for someone. I mean, look at it, Rajesh. He's got attracted a lot of capital because he's made warehousing a lot more easier, a lot more compliant in that way. So, it's something which is a solution provider. And, you'll have to deliver to what the customer wants. That's the first thing. The second is, Amit, where I felt in 2005, 6, 7, a lot of capital came in on real estate, but where it faltered was it only looked at the return, but really did not look at the pedigree, the financial discipline, the corporate governance, the transparency of dealing with which they were taking care of the various stakeholders. So I think there is capital. If you have a great model which is providing a solution and it's an easy solution to be able to implement, and on the other hand, you are well governed, financially disciplined, and transparent with great leadership, I think you'll be able to attract a fair amount of capital.
And just add one thing to this, just after a pandemic, capital appears very smart. It's the smartest at that time. And gradually that smartness level declines as we go into deeper and deeper into a bull market. So keep watching that phenomenon.
I heard a saying by a financier of real estate. He's like, the problem with real estate is that developers have a very short-term memory. But the bigger problem is financiers have even shorter term.
Well said, Nikhil. So coming on to you, obviously you've raised capital while other people in India were trying to save their business. So tell us, what was your experience as far as the investments are concerned? What worked for you? Any advice for, there are a lot of entrepreneurs on this webinar as well. And what does the future look like for co-living? What is your advice for entrepreneurs in this space?
I think the first thing is sticking to fundamentals. So like, for example, for 5 years, I've been constantly badgered by कि WeWork का building देखो और अपना building देखो. And I used to say, sir, WeWork का ROI देखो और मेरा ROI देखो. There's a difference here. My customer is not willing to pay beyond this, so I unfortunately can't build a WeWork building. So we always stuck to basic fundamentals of return on investment, profitability. Then, for example, asset liability mismatch. So the reason Zolo took off relatively slow compared to a lot of other sectors, in fact, comparing with even other co-living players and co-working like WeWork, they sign 18-year leases. We don't give long-term lock-ins from our end most of the time. I mean, unless I'm very convinced about the asset. So that sort of keeps your asset liability mismatch in check. So focusing on fundamentals. I know fundamentals are not sexy for the most, and a lot of times they're not sexy, especially when everybody around you, left, right, center, is raising multi-millions and you are just looking at yourself and wondering, मैं क्या कर रहा हूँ ज़िंदगी में? So then fundamentals don't really make sense, and it's the appeal of where the capital is flowing, where you want to go. But I think for us, the biggest thing that worked is that our fundamentals were always strong. Focusing on culture of the organization. So I personally spend like 30% of my time just working, reading to build that right culture. How to do team meetings, I have researched for like God knows 40 hours or 100 hours. How do you do team meeting? Like, how do you not have a toxic team meeting culture? So sticking to basics, and basics they've been there for the last 5,000 years and they're not going anywhere. In between, there can be aberrations, and sometimes market can remain more insane than you can remain sane. We also made that mistake, quite honestly. For 6 months time in our life, we went bonkers. We just went bonkers. I mean, like left, right, center, Jo mil raha utha lo. But immediately, thankfully, we sort of got into our senses back and look, this is nonsense. Let's stick to what we were doing. We will grow aggressively, but we will not compromise the foundation. And that sort of played out during these times. Like we were CM positive for even the post entire COVID period. We've been able to protect. We've always maintained great relationships with our supply partners. We went back to them. We requested them. We made them understand that, sir, if you keep sticking to the same thing, we all are dead. And we believed in long-term relationships. So sort of people valued that. So believing in long-term relationships, not trading short-term for not trading long-term for the short-term, and all these things, I think everybody knows. I'm not the first guy saying it. Every goddamn book on management says this. Everybody says this a zillion times. But it's the practice of it. It's the fighting that allure of sexiness because fundamentals and basics are never sexy. Fancy things are. I'm thinking of a new business model. I have gotten a new technology and blah blah. God knows. So that's all I would say, that if you stick to your basics, stick to your vision. So as I always say, that there are three things which makes an organization: people, capital, and vision. Have a great vision, think through it, second order, third order, fourth order. Every vision has a certain order, and go as far as it can. Make sure people have right culture, and capital. Don't lose it, and it will chase you one day. One day. I mean, it's not in the beginning. One day.
Well said, Nikhil. So we have just a few more minutes for a couple of Q&A. So Sumit, if you can please lead that section. You're on mute, Sumit.
Thank you, everyone. What an insightful discussion. We have got very interesting questions. Rajesh, thank you for answering a few of them. So this is an interesting question. It says, do you see convergence of co-living and co-working in a post-COVID era of work from home? Nikhil, I think you touched upon it, but would be great to hear Anuj, your view on it, and then Nikhil, if you can add on it.
So I'm Sumit, not very gung-ho of that. I know very briefly I shared it with Amit, I'm not very positive of co-living and co-working being in the same block. I mean, I don't want to live with the guys and work with these guys and 24/7, see them together. So I feel, but as Nikhil said, is that we haven't tested it, we don't know. But I know Amit's view is similar to my view, that these perhaps need to be a little bit more divorced.
Yep. So for majority, I resonate the views. A bulk of people would want a little bit of distance, but time to travel was always and will always remain a consideration. But for a good proportion of people, that's what we're observing. And that can be because India, the base is so large that even if 10% of the people want that, it's $1 billion company, more than $1 billion company. So 10 is also a very big number. Even 5% people want that, you have $1 billion idea here. Given the large base, I think there will be $1 billion idea coming out of it. But in majority, if you statistically look at it, I don't think it will be the majority norm. It won't be the norm, it will be an exception. But that exception itself will carve itself enough space, it will give enough space for it to be a multi-billion dollar idea.
Right. I mean, there is one question around on what will be your recommendations to investors, specifically in real estate space, keeping in mind with the evolving market dynamics?
I suspect I would have asked somebody like Anuj that question, saying, "What do you think?" I think it's an age-old industry where nothing has changed in terms of basics. It remains the same, and therefore I wouldn't try and change too much about real estate investing. I'm thinking of this as not a investor in co-working, co-living, but as just general real estate investor. If you're thinking of it as an investor in proper companies, I would say go to the leaders and invest there, because it will get consolidated. The larger ones will get larger. So think of them as the best investments going ahead. Think of this saying, hey, can I also use my money to create a small co-working, co-living space? Because it seems very easy from the outside. Do not get carried away by such impressions. it's easier to make money riding the wave of a leader who's doing this better than you rather than you trying to find a job for yourself by creating these things, which many people end up thinking of it like that.
Perfect. So there's one question on Facebook Live. It's for Anuj or Rajesh. You can choose to answer. While the government has implemented few initiatives for the revival of real estate sector, what are some additional measures that can be taken by the government to enable the sector to not only survive but to also perform to its fullest potential? So primarily, what is the expectation?
We can be here till midnight. Rajesh and I will have a huge laundry list, and we can be here till absolutely the midnight and tell you is that what are the things that the government really needs to do.
That's why I was going to leave you to answer that actually.
I think there are several. I mean, one of them is really one-time restructuring, which is a common demand by many sectors, including the real estate sector. Second is on the GST. I mean, it is one of a killer within the real estate sector. So, it has been asked by the industry to look at the GST. Third, at the state level, so it's still very difficult to be able to get permissions for anything. I mean, if Nikhil was to try and do, retail, exactly what I just said, retail and then co-living and co-working, I don't know what permission is he going to go for in that building approval plan in there. So, that's a tough one. And clearly a lot of incentivization at this moment in time required, including the registration and the stamp duty waiver and the premiums that the developers have to pay. I think the government hasn't really looked at it post-COVID. All these rates are still going pre-COVID. Once, Sumit, you look at the international markets, the governments have been pretty quick in reacting to bringing, the charges to a lot more reasonable rates just to prop up the demand. I mean, look at China. On the home sale, China is back to pre-COVID level numbers. But that's because the government put in a huge amount of incentivization only till 31st March next year to say we want to ramp it up and we want to get this going. So I think those are the things that I would say is, as I said, it's a big laundry list at this moment in time. But I think the most popular ask today from the community is one-time restructuring.
All right. Okay. Rajesh, any points from your side on this?
No, not really. But I just want to tell Anuj that there has been a release by the RBI today on one-time loan resettlement. So your one wish has been granted by the government.
So Amit, there are a couple of questions around on co-working. So I'll just club them for you. So one is around work from home, its impact on co-working industry. Second, there's a question from a gentleman who is asking, how do we make people more comfortable coming to co-working offices in this era?
So, clearly, I think from our standpoint, we feel that, going forward, again, I hold Anuj's view that co-living and co-working in the same building is probably not going to work. But clearly, work near home and distributed work models, right, will come into play. And clearly, I think companies, as they come back, they will come back in a distributed work model where some people will go back to the traditional or their co-working office. That was their main office location. People will get into work near home because traveling distances, etc. As Rajesh was saying earlier, many of us people are saying, I'm more efficient. You're more efficient because you don't have to travel. You don't have the problems of spending 3 hours every day in travel, right? And unnecessary waste of time. So work near home will happen, and work from home for certain people will become a reality. So I think it's clearly going to be what's probably about a 1% in the marketplace today. I think will become somewhere around 8 to 10% of that marketplace. As it comes to coming back, I think I am sitting out of an office today. And I think so is Anuj, and many others are in that same boat. And clearly, I think people need to understand that the safety and the security of our members is at the highest level. I mean, it's the highest priority. There's nothing more important for us than that. And we are taking all measures, obviously, as Awfis, and Nikhil alluded to it earlier as well, as Zolo. All of us are very, very cognizant of the fact that we have to make these environments safe. So there are various checks. Some are technology oriented, some are physical, some are just standard operating procedures. World has changed, right? I mean, today to come into our offices, there are some 20 checks that happen at various levels, at the building level, at the workspace level, at an operating level. So I think it is as safe as possible. But as we have always said, meet us halfway there. You only spend half of your time in our spaces. It's your responsibility outside to keep yourself safe as well. So I think it's a joint effort. We just can't, ensure that the safety comes only from our side.
Right. Nikhil, two questions for you. I'm just clubbing two questions. So one is, many occupants, tenants have shifted to their hometowns. How has that impacted the share real estate industry? Until when do you think this trend will continue? The second one also is, how do you view ITES as a segment for co-living industry?
So I'll answer the second first. It's a simpler one. ITES is almost 50% of sort of co-living industry as a sector. And because ITES is sort of very much inclined to how co-living dynamics work. It's suburban phenomena. IT tech parks are generally suburban, so the land price is relatively low there for it to sustain higher yield co-living assets. So ITES has been always a big contributor and will remain a big contributor. The second question is, people have gone home, and and when do they seem to be coming back? It's true, people have gone home. As I said, 30% of just sort of shut down. It's sad though. I mean, I'm not really happy about it. As an individual, I'm actually not very happy, because these people also had dreams, their families to feed. So they're already wiped out, more or less. And regarding coming back, what we are observing from the ground is that July lockdown really postponed the plan by 3-4 months. July first week, we started getting a lot of inquiries that towards the end of July, we are coming back. Thousands, I'm not talking about ones or tens, I'm talking about thousands of them. July lockdown, that 7 days, government probably did not realize, will not ever realize, I think, that those 7 days did as much damage as perhaps the previous 3 months. Because the entire momentum got clobbered. Now companies can't say you come back, because now it's just uncertain, like Rajesh was saying, right? That there has to be certainty. So it's just uncertain. And Anuj had drawn that W instead of a V. we don't know when anybody will do what, because that was just not expected. And that it has created a fear in the minds of business, fear in the minds of employees. Because people don't want to travel back and forth. Like, we had called almost everyone back in June, and then back in July, first week, and everybody went back. Now we don't have the guts to call them back. Because I can't ask them, the dude come, and they'll be like, sir, if lockdown aa gaya, then I'll have to go back on train or flight again. It's very risky. And that uncertainty is basically what's killing the most. And that 7 days were not just 7 days. They were a sign, a message to all businesses and people that, dude, any time pass can happen. And that's what we need. If government somehow comes out and says no more lockdowns, I can bet people will start coming back in like 45 days. But that guarantee of that thing has to be said, that look, we will fight it the way it is, and we are not going to do any nonsense in between. Then it works. It works like a charm. This Indian spirit is indomitable. We still get, and we started getting pre-bookings, obviously. People are itching to come back. It's just uncertainty which is creating this problem. Any day we get a certain narrative from the government, these kind of surprises will come. Add 45 days to it and people will come.
Got it. Great. Thank you, everyone. Thank you for answering the questions. Over to you, Amit, for any closing remarks.
So guys, it's been a fantastic 60 minutes with each of you. I personally have learned a lot, and hope participants has as well. Thank you for all the participants to make this a success, and our panel for sharing their candid views. We all hope, whatever is the shape of the ladder, the recovery starts soon and we can all get back to the new normal. So guys, stay safe and stay happy. Thank you.
Thanks, everyone.
Thank you
very much.
Thanks.
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 Great.
Bye.
Bye.
Thanks.
Bye. Bye.
Thank you.